Hi everyone, Shout back with another video. Today I'm going to be talking about Micron technology, the memory and storage data producer. Micron is a company I've known about and kind of followed for a long time, but this is the first time I've decided to do some research and really dive into it. The stock is down nearly 25% in the last year, but has more than doubled in the last 5 years, and it's basically 10x in the last 10 years. It's been an excellent stock to hold over the longer term. It's currently an $81 billion company that trades under 10 times earnings. Hard not to be interested in this type of company, especially with the long-term tailwinds of the semiconductor industry, so I wanted to dive right into it. By revenue, Micron is one of the largest semiconductor companies in the world. It kind of flies under the radar, but it's an $81 billion company, so it's by no means small, but it's not exactly a household name like something like AMD, which is not a million miles away in terms of market cap. Micron is in the business of memory and storage mainly. Its core technologies are dynamic RAM, NAND or flash memory, and NOR. Dynamic RAM is by far the most important for them, being more than 2/3 of revenue. I think it's around 70% of the most recent quarter. Memory and storage is a cyclical business, and Micron is constantly spending to outcompete its rivals, so by no means a completely easy investment and easy business. There are big rivals in this game, Samsung being one of them, so not exactly small players. By Micron's own estimation, memory and storage market is expected to grow to an $183 billion market in 2024 from $120 billion in 2020. They are very positive about their own demand outlook. Price targets vary from other companies, but the company themselves are very positive. They believe there's going to be large demand from data centers. There is already large demand, but they believe this will grow in the future. They're very bullish on their new product development, and of course they'll look to capitalise on the growing industries of AI, 5G, and many others, self-driving. Generally, the digitalisation of the world, more and more people with more and more digital products, they will need memory and storage requirements, and Micron hopes to capitalise on this. First thing I tend to do with any business is scan the balance sheet, see if there's any red flags, because we'll go into valuation in a minute, but this is a cheap company, so I'm looking at some red flags. This is just some charts from Guru Focus. No serious red flags for me. Cash on the balance sheet of around, or cash and equivalent of around $12 billion at last filing. A 1.33 cash set ratio. Not perfect, pretty weak for the company's history, but not the worst you'll ever see, and good enough. If it's above 1, I would like more, but that's not overly concerned. That's not so concerning to me. 10% of market cap in cash, or more than 10%, is absolutely fine position for me. Debt to EBITDA is strong at 0.46. Debt is well covered. Debt to equity of 0.16 as well is pretty good. Assigned an Altman score of 5.33, indicating that this is not a company at risk of financial default in the near term. I can't see that going forward either, despite this being a largely cyclical industry. On the other hand, most recent margins are absolutely outstanding. 33.45% operating margin and nearly 29% net margin are both absolutely excellent. Takes home 29 cents for every dollar of revenue. Hard to overstate how strong that is. You look at the dark green for the industry. This is a very good store, even for the semiconductor industry. Not amazing for Micron's history, because memory and storage, they are to an extent commoditized, and they go up and down in price, and there have been times when the price is very high, and Micron has really ran away with this. But right now, that's kind of in the mid-range of Micron's margins. Return on equity percentage of 20%. Decent. That's pretty good. The top end of the range that I would expect. And return on assets of 15% is again at the top end of that 5 to 15% range you see with a lot of companies. 15% is pretty good. Return on invested capital of 21% as well. This is surely a company that will be dramatically bigger in a few years with a consistent ROIC like that. A good balance sheet and excellent profitability metrics. All looks pretty great so far. Next up is some basic valuation metrics. This is where Micron really shines. Valuation really doesn't match the business, the margin profile, and the historical returns of the stock. It's been an excellent stock to hold. Price earnings ratio of 9.22 on a trailing basis and 7.86 on a forward basis is positively bargain basement, far below the S&P 500 averages on both a trailing and a forward basis. By every metric, this company is very lowly valued. A PEG ratio of just 0.5, well below the traditionally cheap threshold of 1. Price to operating cash flow of just 5.5, very, very low. Even price to free cash flow, this is not a company that traditionally has great free cash flow metrics. 17.16. This is very cheap, exceptionally cheap for Micron's history, and cheap generally. Not a metric I can find really that makes this company look anything other than exceptionally good value, and it's clear there's a lot of mispricing going on because this is an inherently cyclical industry. People are a bit bearish on Micron's prospects, but right now the stock is absolutely doing really well, and valuation's clearly not caught up with that. Next up is, of course, discounted cash flow to work out a true fair value of this company. Now, this is a bit difficult to do because it doesn't have very good free cash flow metrics. It's a bit all over the place because it's a cyclical business and because it's had some ups and downs. So there's not much free cash flow data to go on or traditional earnings data. So what I'm doing is basing this off the revenue. I believe that it can continue to grow, and that is all the DCFs are eventually, is projections based on your own estimations. I believe they can continue to grow earnings at 10% average rate for the next 10 years, and this is right in line with the 5-year average for revenue at 10.7%, and actually below the 10-year average growth of 12%. That, using this metric and a 4% terminal value, 9% discount rate for the long-term returns of the stock market, versus a present stock price of $73, this gave a fair value of $151.51. That's 100% return, effectively, 100% theoretical return. Now, of course, this is a degree of projection. They grow their EBITDA at 20% a year over the last 10 years, really strong, 18% a year over the last 5 years, but that's just not translating to earnings and free cash flow consistently. The business is in a really strong place right now. Over the longer term, it has a well above 10% compound annual growth rate for revenue, and I believe they continue to do this and earnings will grow in line with it. Of course, even for conservative estimations, this company is effectively priced to have negative future earnings when that is not what analysts are expecting and not what Micron are expecting. You can input any value into the growth stage in this calculator. If you input 0, this is still a company that is trading below its intrinsic fair value. I believe that 10% is relatively conservative. 5 will be even more conservative. Either way, this is a company that is trading significantly below its fair value and has a decent margin of safety going forward, which is really important for me. Just briefly looking at how it performed in the most recent quarter, broken down by business units. Year-over-year mobile growth was the lagger at just 4% year-over-year growth, but the 3 other segments, all over $1 billion, all posted year-over-year revenue growth of more than 30%, led by computer networking. Dynamic RAM remains a much larger share of revenue than NAND at 73% to 25%. All of this, no red flags here. All businesses are growing, even if mobile was lagging slightly. Excellent numbers. Mobile was down slightly quarter over quarter, but that's not so much of a concern because, again, cyclical business, that we're not expecting this to go up in a straight line all the time. And of course, there's such a large margin of safety here with this company trading at 8 times sales. I can stomach that a quarter over quarter change of minus 2% when the year over year change is good enough for me at 4%. And that's only for a relatively small section of the business compared to when you combine the 3 others. Looking at a more general financial summary, really good revenue growth quarter over quarter, but excellent year over year, going from $6.2 billion in 2021 in Q2 2021 to $7.786 billion in Q2 2022. Really strong. Gross margin expanded slightly from 47% to 48%. Cash position is strengthening, just a continuation of really strong results. Net income down slightly, but I'm not going to ding it too much for that because there's a lot of aspects that go into this, particularly supply chain, and that is really just not a big enough drop for me to ding it that much. These are all just excellent results for me and just continues to show why Micron is performing so well. So all in all, it's not a perfect company, don't get me wrong. It does not have a monopoly on its tech, like for instance ASML, and must compete on price with its competitors, which is not a nice situation to be in. There's not a ton of moat here. The industry has great long-term secular growth prospects, and I believe Micron is well positioned to capitalise on this and see no evidence for losing ground on its competitors. The most important aspect of this for me is margin safety. I believe that the price is so cheap right now, like what is it, eight times forward earnings. The cyclicality of this business is nowhere near as much of a concern, purely for the large margin safety. This is a business that, despite the lumpiness of revenues in the past, continues to grow at a strong compound annual growth rate over the long term. I'm a long-term investor. I don't particularly care for the year-over-year changes in stock price or revenue. I'm interested in the longer term, and if a business is delivering a good compound annual growth rate over the longer term, good return on invested capital, I think they'll be an excellent business to own at the right price, and this is a company that is trading at far below its fair value, has good long-term prospects, good balance sheet, excellent margin profile right now, and recently started paying a dividend and has a good track record of share buybacks. I'm starting a position this week and scaling in small percentage of my portfolio for now, 2-3%, see where it goes from there. But I'm very excited to own this business and I'm excited for its prospects going forward. Tell me what you think of Micron below. Tell me what you think of the company. Tell me if you think it's a bad investment, a good investment, whatever. Open to criticism as always. Like and subscribe if you enjoyed the video, and I'll see you again next time.